right. So welcome everyone. We are today. I'm going to be spending about an hour. Maybe it will go a little bit more than an hour, based on the discussions that we are going to be having about how do I approach trading as a business, and how do I really stack all my odds in my favor. So who am I? I am Milind Paul. I passed out IIT Bombay long back now, almost 26 years back. I am a trader, investor. I'm also trainer. I also am a technology architect and a CTO, mostly in the health IT sector, and have been making my hands dirty with some code with AI and other things. So there are a lot of things that I have been doing, and this trading for me has been near about 5% to 10% of my time it takes. So before I get into it, very quickly, the risk disclosure. It's your money. You need to take responsibility for your money. I would be talking about the markets. I would be talking about my expectations from the markets today, probably. But your financial success depends on a lot of factors. I cannot take any responsibility for that. So what I really do, you could, I mean, there are a lot of people who ask me why you call yourself trader than an investor, what you really do. And I have been mostly an investor. I used to have about 90% of my investing capital into stock markets. Mostly I did do commodity markets, but mostly as an investor. In around 2020, I shifted mostly from the investing to trading, and there was a reason. I expected the markets to not be a great market for the investing point of view, and actually I did make a mistake also. I missed a lot of opportunity in the rally that happened after post COVID, but then as a trader I made a lot of money. No regrets there, losing as an investor but earning as a trader. I always try to convert each of my ideas into options trade, which gives me very high probability of win, and it also gives me very high reward to risk. And today's session is going to be talking about mostly these areas. How do I really approach the market? What do I see it, and how do I get into high probability and high reward risk? I'm not going to be giving any canned solution, but I'm going to be showing you something which probably in high probability you may not have observed the way I observe it, and then it would be something that you could utilize and make use in your trading or investing or whatever. So before I start, and I'm not doing this to impress with my trading, but this is to impress upon you the capabilities and possibilities which are there in the markets. And please don't take it in a wrong way. Most of these, I don't share my trades, but most of these have been shared with my students, my groups, for helping them learn. And that is what I'm just repeating some of the shares. So this is something that I did for about 7 weeks. I did it with my students from options trading class. Over 7 weeks, we have made so far about 13% on the capital, almost 2 lakhs. And it could go a little more, about 15% is what we are aiming to finish the 2 weeks, 2 months with. This is a TCS trade. I do a lot of trades on results day. So TCS, I could earn 2% on my deployed capital in about 18 days, as long as TCS does not go more than 13%. Okay, so if it is here, if it goes down, I'm perfectly okay. I'm taking home 2% on my capital. This is Wipro trade, where I would be getting around 7% on my deployed capital in about 15 days, as long as it does not go up by 7%. Okay, Wipro charts are a little weaker. I don't expect it to go up. And because the numbers are a little lower, 12%, 7%, I'm able to take much more money. Infosys, again, same thing. I would be able to take 7.5%. If it does not go down, Infosys charts seem to be a little good. The results have been good. So if it does not go by 6%, I will take home my money. And I have been also for over last about 6-7 weeks, I've been talking about weekly trades every week, and there the hit ratio is about 90%. 1 week we did not make money, but otherwise every time we have made money on an average about 3.6% a week. Now it's the today's session, I'm trying to be focusing on how anyone with the normal IQ can earn this kind of money. So please forgive me if you think I'm doing talk about my self-talk. It's not the intention. The intention is to put a yardstick, put a goal, a vision, so that we will try to achieve. There are lots of my students who do much better than me, and that is really possible. Again, this does not guarantee anything in future, and I'm not here to tell you the trades, and I don't want people to follow my trades. I like to teach. So starting the session, we always keep on saying to win in a casino, you need to be a dealer. What is the dealer actually? Dealer is somebody who has got odds in his favor. He is not interested in winning that every deal, but he is winning the deals over a long numbers. Okay, over a huge number of deals, he is going to be winning with a lots of odds that are being in his favor. He is the one who is happy if people trade more, and if people earn more, he is also happy, because when people earn more, they are also going to be investing a little more. I have just extended that into stock markets, and I think if you want to win in the stock markets, you need to win over your fears. There are a lot of people around you. There are a lot of channels like CNBCs and all these channels, the newspapers. Everyone keeps on telling you, guiding you as to what to do in the market. People will say, oh, you have to buy, you don't go into trading, you have to be an investor. Investing is so much safer, trading is so much risky, don't do this, don't do that. And they have added so much of fear in us that we are just working as if we are robots as per their wish. And if you take that out a little bit, you will be able to win in a stock market. Like you could make it as a business. I mean, it will give you consistent money. Most important thing is you should be able to get consistent money. Most important is your risks should be minimal. There are wastages. Any business, there are wastages, there are losses. In stock market, you may get losses, doesn't matter. But then when you sum it up over a period of month, over a period of a week, over a period of a year, it has to be positive, and it has to be so much positive that you could actually live with it, right? So that's a very important thing. And we know very well that emotional people lose in the market. When markets are going up, everyone starts saying buy, and people are going buying, and then bubble bursts. These are the emotional people who lose. When markets are crashing, these television channels, they will talk about whatever numbers that they can think of. They'll say market is going to 7,000, going to 8,000, market tomorrow is going to crash, it's doomsday. And then those emotional traders, they will start selling, or they would sell their huge earned investments, and at the end of the day, they lose in the stock market. Now, what you could do as a really intelligent investor, you could win over fears of those emotional people. Can you? Now, there are a lot of people who talk to me about being ethical, non-ethical, right, wrong. People say it's a zero-sum game. When you win, somebody else is losing, and so many things. Now, if you really look at a boxing match, somebody who, let's say you are a boxer and you go into the ring, and there is an opponent who is also coming to play with you boxing. And if you don't punch on his face, I mean, you can't win, right? And the people who are watching, they can't tell you that, oh, it will hurt him, please don't punch it on his face. Now, if he has entered into a stock market, if he has started doing trading without knowing what he has got into, I can't help it. If I know little more than him, or if I'm more capable than him, I have all the rights to win. So I don't, as long as I don't do illegal things, I mean, we society, we have got some rules, and as long as I don't break those rules of the society, I'm perfectly okay, in my opinion. You may have your own different opinion, but then nobody has asked him to come in here to pay me money, right? I mean, a lot of times I keep on saying that stock market is like an ocean. I mean, there are so many opportunities. You just need to take your bucket there, fill up with the with money, and come back home. It's as simple as that to me. Okay, and it only depends on what is the size of your bucket that you can fetch. So I don't think it's really wrong. And yes, I do watch emotions in the market. I do look at I do use my charts to read the emotions of the market, and I do try to use those emotions in my favor. Okay, that's the first principle that I use to put odds in my favor. Now, there is a very simple thing which talks about emotions in the market, and that is options premium. Options premium is a very basic and very simple gauge of fear in the market. The moment markets start getting more and more fearful, they start increasing more and more premium, also called as IV, intrinsic value. IV, the IV is not intrinsic value. The intrinsic value starts on increasing. The IV starts on increasing volatility, and then you would see lot of fear in the market through options premium. So what I say, and if you really look at the charts, these are the charts for last Thursday expiry, and last Thursday expiry happened near about 17,000 Nifty. And if you look at it, I've taken all the way from 16,000 Nifty, that is 16,000 CE and PE, to 18,000 CE and PE. So almost everything that you can imagine, right? 1,000 points down, 1,000 points above. And these are the charts if you really look at it. For example, this particular chart, it is a 16,200 CE, 1,200 to about 600, sorry, 800, almost 400 points it has given if you were a seller. Now, this is 200 PE, which would have given 90 to 0. This could have given 1,100 to 700, around 500 points. This is 110 to 0. This is 1,000 to 600. This is 130 to 0. So if you keep on looking at these charts, you will keep on seeing that if you were a seller, you were standing against those emotional players, you would have been able to make at least 300, 400, maybe the worst case is 100, 200. The best case is 300, 400, 500 points. And this is, I would just wait for it to go to 17,000, which is the ATM at the time of closure. So if you really look at these charts, they are showing that the sellers in the market are the ones who are going to be eventually profitable. Now, this is I don't have any mechanism to do probability, but if you really look at it, you would be able to see almost 70% of the times the options, 70%, 80%, sometimes some expiries, it could be also 90%. Expiries give you money as a seller if you sell towards the last few days of the expiry. Let me quickly go to monthly. The monthly is even better. Okay, so right now the market is at 17,180, almost 200. So if you look at 17,200, now I'm talking about monthly. If you look at it 1,000, and now it is trading at 200. This is 17,200 CE. Let's look at 17,200 PE. Now it started with 150, went all the way to 600, and from 600 it has gone all the way down to 200. That is 400 points. Okay, let's go lower. Okay, so let's say a 16,800 CE, you could have made 1,300 to about 500, or even if you look at the last leg, it could have been 750 to 500. Really doesn't matter, right? So look at the CE story of the same. You could have done 400 to 91, almost 300 points. Let's go a little more deeper. 600. So here 1,500 to about 600. 600, 16,600 PE, which is 300 to almost 55. This is down lower than the ATM. So let's look at the higher side, 17,500 CE. So if you look at 17,500 CE, 800 to 98, 700 points, clean 700 points. Okay, 17,500 PE, you could have done 900 to 400. Now you would say that it is because of the current market structure, because it is sideways, or because it is going up, or because it is going down. It is like this. I have watched expiry after expiry, expiry after expiry for last almost 15-20 years. I have seen same behavior. If you're not confident, watch, look at for yourself. Don't have just blind faith in me. Just don't follow me blindly. Look at the expiries. Just look at how the opportunities are there, and the opportunities are just going by. This is all because of fear. Okay, people are fearful. They think that tomorrow there's going to be an end of the world, so let me buy puts. There is markets can go really, really high. Let me buy calls. So cheap, right? Buying option is so cheap. There are so many people who come back and tell me that why are you selling infi calls and puts at the time of results? Only 8 rupees. 8 rupees. I can just simply buy that for 8 rupees, and it will give me 100 rupees and 200 rupees. I did exactly the same. I sold those 8 rupees, and I am able to make 13, 14, 15% in in about a month. 7% in 15 days is 13, 14% in a month, right? So you have been taught something which really, really helps someone else. And that is exactly why 95% of the traders lose money in the market. It is a structure. You just need to observe the markets in your own way and to be able to break through. Let me go back to the slide. Where is it gone? Okay, so this was it. I have also shown you the monthly option contracts, which give you even better opportunity. Now let's do some basic calculations. Okay, let's take a target that we just need to do 5% money in a month. Okay, and so you probably would know that to short one Nifty, one lot of Nifty, you need near about 90,000 rupees of premium. Okay, it may vary broker to broker, but it cannot go beyond 120,000. Between 80,000, 90,000, 1 lakh is what you would need to be able to sell one contract. It's this structure given by SEBI, based on which all the brokers charge you the margin. Now, 5% of that 90,000 is about 4,500 rupees, right? You need to, at the end of the day, if you're putting in margin of 90,000 rupees, you want to be taking home 4,500 rupees. If you do that, you've won 5% in a month, right? If I divide that by 50, which is the size of the one lot, I only need 90 points in a month. And I have given you so many examples, weeklies, monthlies, which could give you 400, 500, 100, whatever number. I mean, the numbers that we just now saw, they all were way above 90. Now, if I'm making 10% in a month, that's just average, right? That's very, very normal. There's nothing great about me making 10% in a month, because your options and Nifty, by rule of it, because it's an index, it will give you lesser swings. Okay, that's one of the reasons why I am also trading with Nifty. I want my peace. I don't want my stop losses to get hit. I can sleep very happily. That's why I do trade Nifty. But even in Nifty, to get those 90 points in a month, it is so easy. I mean, I will just quickly impress upon you one more time. If you were trading 17,200, if you were very lucky and you were trading 17,200, where the market currently is, you could have made 600 to 200. Forget about that full fall. You could have made here 400 to 200 points. If you were trading not P, but the CE, 17,200 CE, this is a single side, right? You could have made 900 to 200, 700 points. Forget about that. You could have made 450 to 200 points. I mean, let's say you were not accurate and you did 16,800, CE and PE both. Here you would have made 1,200 to 500. This is 700 points. And let's say I do the same on the PE side. You would have, let's say you were not very, very accurate. You could have sold it at 300 and you would have made only 200 points. Or probably you would have lost. Okay, you would have probably bought here, sold here 150, and you would have sold it at 200 points. Even if you would have lost that 100, 200 points, 750 you won in the other side. Let's say you were wrong on the other wrong side. So 17,500 is what you would have done. 17,500 PE, you could have made whatever. I mean, you don't consider the top. You consider 700. 700 to 300, 400, which is 300 points. 17,500, this is PE. Now this CE, this was complete single-sided, right? So you could have made 500 to 100, which is 400 points. Again, adds up to 400, 500, 600 points. And I'm saying all that you have to do is to do 90 points to be able to make 5% in a month. The question is, can you be consistent? Okay. I'm just going to take a quick break and take some questions. There have been some comments in here. Rahul is saying C have gone down as market went down. Same way P have gone up. I'm not sure what is your point. You can pick up any example, but what made you decide a level and why? I am not even talking about level, Rahul. I am talking about take anything, okay? And let's say you were completely wrong. And let's say you were trading this monthly contract, and let's say you were selling both CE and PE. I usually sell both CE and PE. So let's say you sold 17,500 CE about let's say a month back, which could have been somewhere here. Let me just use the annotation. So let's say you were not able to catch the top, perfect top, you would have sold it here. So 500, and you today are sitting at 98. That is 400 points. Okay. Now let's go. Let me just delete this. 17,500 CE. Let me go to 17,500 PE. Okay. So I don't know where the market is going. Okay. I have just sold both CE and PE. I'm not concerned about where the market is going. I'm just selling both C and P of the same level. Now, if I do that for 17,000, this is P, then let's say around the same time, somewhere here, I would have sold it, which is around 650. Today it is around 400. So another 200 points. So 200 plus 300, 500 points I have taken. 500 points on Nifty. If I go back into the same calculations, okay. So 500 points, multiply it with 50. Let's open the calculator and do that. 500 multiply by 50. This is the profit that I would have made. Okay. Oops, sorry. This is the profit that I would have made. And to make this profit, I would have sold one call and one put, which is probably 90,000 plus 90,000. Actually, if you do both sides, the margin requirement is lesser. Let's say you paid the same thing. Let's say you paid 2 lakhs. Okay. So divide it with 2 lakhs. This is the profit that you would have made, 12%. Okay. Now, let's say you did not do 17,500. Let's say you did 16,800, or let's say you did, take any number. I mean, let's say you were very, very wrong and you did 16,800. 16,800. If you were a seller of call, you would have been able to sell somewhere here, which is, let's say, 1,000. Now 1,000 has become 500, which is 500 points. And let's say 16,800, this is C. Let me go to P. 16,800 P. Let's say same levels you sold, which was 300, 200, which is now at 90. Another 100 points, 500 plus 100, 600 points. So all that I'm saying, yes, technically it is called straddles, but you don't need to do straddles. You could do strangles. You don't need to do that also. You could do ICs and IBs. IC is iron condor and IB is iron butterfly. You could do that. You could actually, it would actually reduce. So I will very quickly talk about how do I do the stop loss, delta hedge. Maybe I have to go into options oracle or some options software, and I will talk about that also. I could. So if you really look at most of my recommendations are always hedged trades. Okay. So if you have to hedge the trade, and if I have to go in here, I'm just going to show you how much does it cost. So let's say I'm doing Nifty. Let me get rid of the annotations. Okay, and close this. So let's say you could do 17,000. Nifty call 17,050 sell, and 17,000 put you sell. Okay, so if I do both sides, it is not double. It is only 1.3 lakhs. That is one thing. Second one is, let's say I have done sell of 17,000 CE, and against I am going to be buying even further above, so 17,500, let's say. Now this is going to reduce my risks, right? So it is also reducing my premium. Sorry, the margin. It will also reduce my premium. Yes, correct. But now I don't need to earn 90 points. I only need to earn 40 points, 45 points. To earn 5% in a month, we are not talking about small numbers. We're talking about 5% in a month. 5% in a month, if you compound, it becomes almost 80% in a year, almost doubling your money. 5% in a month. 6% in a month will double your money. 6.5 or something. So if you, I mean, that is the kind of opportunity which is there. And it does not matter whether the market has stayed around that level or not. It does not matter. The market can move. I mean, I will just quickly show you the charts also. This is 75-minute chart. So here, if this is the period that we are talking about. If I look at October monthly expiry, this is the period that we are talking about. Okay, let me draw a rectangle. Here, markets have not, I mean, markets have moved up and down. It's not steady one side. It went from 17,600 all the way to 18,000, 18,000 to 16,800, 16,800 to 17,200. Markets have done all disco that it could have done, right? So just saying that it is not good to sell this straddle when market is giving you up and down move, that is also not the case. I mean, you can, there are ways in which you could even improvise this, and I'm going to talk about that very, very quickly. Let me just see if there is any more comment question. How do I see that here? So that was the comment from Rahul. Selling options have scope of unlimited loss. So any insights on stop losses? Yes, I do not do unlimited. I want to sleep tight in the market. So I always do the covered calls. Not covered call is a wrong strategy. I always do bull put and bear calls, or I do IC. IC is condors. Or I do butterflies. Okay, we can talk about those little later. I would be happy to talk about it. The point that I'm making, if the market goes 1,000 or it has gone from 18,000 to 16,800, that is 1,000 points. Market has gone 1,000 points against, Rahul. It's not about, I mean, you just observe it. And you observe lots of charts. There are ways to make it even better. I'm going to talk about that also. When markets have stayed around the same level, any straddle will make money. This is, yes, this is what you have been told. This is what you have been taught. And that is why people are afraid to sell options. Yes, there are risks. I'm not saying that there are no risks, but then dar ke aage jeet hai. I mean, you need to figure out how to manage your risk. I'm going to talk about that also. What is the stop loss? When is the delta hedge? Okay. Yes, Kumar, Vijay, I'm going to allow you to unmute. Just give me a second. How do I do that? Yeah, I've requested you to unmute.
Yes. Hello, sir.
Yeah, sure.
So, sir, my question is that there is in options, there is a one concept of time decay. So there are many blue chip companies where the patterns is almost that they are not very high beta stocks. Their pattern is almost flattish. So like you say rightly that everyone wants to grow with a 6 and 6.5% return monthly, and with your so many years of experience, can it be stated with a very confident label that this is the method, this is the way you adopt this one, and definitely you are going to make your target hit every month?
I am not giving you a prescribed strategy. I do have lots of prescribed strategies that I talk, but today's session, I am not talking about prescribed strategies. I'm only talking about at a very high level, what are the opportunities. Okay, I am going to talk about few places where it does give you high probability wins, but I'm not talking about any specific prescribed strategies. I mean, my trading rules go to a level saying, look at exactly where is the IV, what is it compared to the past, where exactly it could be, where the charts are, what the charts are telling you. So everything. I mean, my prescribed strategy has got exact rules that I can even code in a computer. That's not what I'm going to talk about. But today what I will talk about is when the IV is high. Okay. So when are the right times to sell? What are the best levels to sell? How you could manage your risks? That is what I'm going to be covering today.
But answer the last question, like last question that you said that say 17,500 CE and PE. Is there any in a Nifty just maybe you are talking a lot of technical, but for a layman, is there any simple strategy that like 17,500
Yes.
CE and PE he just sort buy and sell both side and simply he make money without going too
Yes,
much.
I will try to talk about that. Just a little later, I will cover up few more slides and then try to address this.
And then sir, last two questions. If you
Yes,
last
sure.
lately you can cover,
Mhm.
that will be fine. QIB and pre-IPO side, if you are doing in that and some of
IPO, I really don't do it.
pre-IPO,
Uh,
sir. I'm asking pre-IPO and QIB.
I don't do pre-IPO.
Okay.
I am I have a opinion that I would not talk about it as an opinion. I have tried a lot to use fundamentals, but fundamentals have never given me the answer what. I mean, they give me answer of what, but they never given me answer of when and what levels. Okay. You could have a stock which is 90 PE and it will still continue going higher. I mean, if you just look at Indian markets, they are 60s and 70 PE compared to the similar stocks in US with 15 and 20 PE. I mean, I can't understand this fundamental, so I avoid the fundamental analysis. So I cannot trade the IPOs. And to the second question of yours, QIB. No, I also don't do that. I had a reason why I shifted from investing to the trading is because I believe we are in a lost decade. Okay. One very basic thing, simple thing to identify, and I'm going little bit on the Elliott wave side. On the chart, whatever you see the highest, fastest moving up, that tends to be wave 3. Wave 3, that is the wave 3 characteristic. Now, if this was the wave 3, all the way from 8,000 to 18,000 something around levels, then that follows a wave 4. Now, if the wave 4 has to follow, wave 4, usually the characteristic of wave 4 is painful, sideways. It will have lots of ups and downs. It takes time and patience of people. I'll give you a very simple example of the sideways market, Reliance. Okay. And Reliance, if you look at it from 7,000, sorry, 2007 until 2017, 10 years, from 800, Reliance is at 800 only. It had got fantastic fundamentals all the way. They tried doing the petrol stations. They tried doing Reliance Retail. They did a lot of things, but still they did not give you returns. Now, if this is something like this is going to happen, today I am nearing 50. I don't want to be at my 60 and still have the same money. And in 10 years, you know what the time value I will lose, right? Even if I consider 10% a month, I would be left with 30% of what I have today. I can't afford that. I have my kids who need to go to college. I need to spend for all that, right? So I can't afford to have be an investor and wait for 10 years to markets to move from sideways to upward. I mean, after 10 years, they may give you 5 times. I am too old for that way. I cannot. I cannot do it that way. That is the reason why I shifted from trading to investing. So I don't do any sort of investing at this point in time. I do. I have got very small, about 10% to 20% of my capital. There are Infosys shares, emotional. Then there are few MRF shares. But I mean, I don't do active investing. It's just there. Very small, 10 to 20%. Can I move on?
Yes, sir. No problem. Go ahead.
If anyone has any questions, just you may raise hand. But let me just finish few more things. My presentation is not too long, so I'm near about done. because the most important point that I have to make here is that there are opportunities in the market, and we are able to stack our odds if we are the option seller. Okay. Now, how do you really improve that? So how do you improve? We want to improve the probability of the win and profitability of the win. Okay. So if we need to improve these two things, the premium is high when IV is high, volatility, intrinsic volatility is high. Volatility, IV, is very simple thing. It always moves like a pendulum. It will go up and come down, move up and go down. So unlike the stock, where you would say that now I don't know whether it will go up or down or what. If IV has gone up, there is a high probability that it will come down. Very, very simple, right? So if you are a seller of the option, you want to have IV to be high. And very simple. I mean, you just look at the IV. I will show you very simple way of what I could recommend you. Very simple. Just here, India VIX. This is Friday. Friday it came down by 10%. I mean, 10% IV. The options premium suddenly drops. Okay. So all that you need to look at is this India VIX. The day when it is 10% plus, you buy, you sell and you hold till the time next day you see minus 10% drop and you will take home money. I mean, that's as simple as that. It cannot get more simpler than that. But how do you know when the IV is going to be higher? So the first one, just before the results, the IV is extremely high. And I have given you those three examples. Out of those three examples, Wipro, I had done a trade, and then next day, result day, one day after the results were in the evening, the markets open almost 7%. The next day it did 7% down. My trade was negative. Okay, do you know how much? I had potential to make around 37,000 rupees, and it was minus 1,400 rupees. 1,400 rupees. That's it. Day later, when IV dropped all over the markets, I was in profit of around 3,000, 4,000 bucks. After having 7% drop, and then there was little more drop that came in. But I am at this point in time, I can open that trade and I can show that trade. So that was the story of Wipro. I'll do that later. Infosys, same thing. Infosys, the results were pretty good, and it went up 5% in single day. But on the same day, my strategy is in profit. I had to do a little bit of adjustments here and there. Yes, there were, I had sold both calls and puts, and I was little away. And because Infosys was going up, I had to cover up my call. And in that call, I made a little bit of loss. So I had to cover up with a little bit of profits in puts. So let's say I had a call which is making loss of 10,000, and I have a put which is making profit of 20,000. What I did was I closed all the calls minus 10,000, and I closed half the puts. So it has become zero. On paper now I am zero, and remaining put I still have, and now that is 7%, 8% down. So I will still make money as long as Infosys now cannot fall any further. So it's a very simple mathematics. Okay. Second one, just before major announcement, if you have got your finance minister coming in and talking about something, US nowadays, Indian market has started reacting to US news also. So just watch about that. Don't take just that the news is there, so IV will be high. Evaluate the IV. You can just evaluate it simple with the India VIX charts. And then just after a major fall, so whenever you would see a 3%, 2%, 1% crack in the market, and it could be also intraday, just keep watch on India VIX. India VIX will tell you that the IV is suddenly shorted up. Okay. Similarly, when the markets randomly goes up like this, 2%, 3%, you would not see the IV getting higher. IV will actually reduce a lot of times. That's my observation. Sometimes it also increases, but about 70% of the times IV drops. That is what happened on Friday. Friday, we have moved up by 100, 150 points effective, and IV has actually dropped. And option premium is also high if you are a contrarian trader. So everyone in the market thinks that the market is going to go down into the dooms, and CNBC is shouting that sell, 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 sell. At that time, IV is very, very high. You can catch the falling knife if you have got guts. Okay, if you are good in the technical analysis, you do that. I do that very often. So a lot of times you would see when the markets are going up, I would say high potential reversal zone. And at that point in time, I don't sell the same levels. I will just give you a quick example for Nifty only. Nifty 75-minute. So here, this something happened on a couple of my groups. I had this discussion. People here, when markets were 17,400, 400 something, people were saying, boss, now market has to go up. It will go up. We are decoupled from US. I don't know what all. The fundamental analysts have got lots of different terms which I don't understand. Lot of things. And then I was actually selling calls. And I was not selling 17,500 calls. I was selling 18,000 calls. Now, what are the odds that the markets will move from 17,500 to 18,000? Probably high. At the same time, what is the premium that I'm getting? So if you just look at that day premium, 6th of October, 6th of October, 18. This is 30-minute chart. Let me go to daily chart. Yeah. So 6th of October. Here, it was around 88 rupees. Now that 88 rupees has become 13 rupees. Now I have made my 70 rupees. I mean, I'm only looking at that 90 rupees, right? My target is not to take home everything on single month. My target is 5%. That's all I need. I only need 90 points. And I'm selling not 17,500, I'm selling 18,000. And from 6th of October till 27th of October, 20 days. 20 days is 3 weeks. 3 weeks is 15 trading days. Out of that, there are going to be Diwali holidays. So only 10, 12 trading days. And I have got buffer of 500 points and 500 plus 100 points. Now, if I do like this, you may say that I'm catching the falling knife or when markets are going up, but I have my ways to calculate that. I do Fibonacci, I do Elliott waves based on that. Same thing, I did it again when it was near about 17,300. Now here, I got even more premiums because the markets were, and I did not do monthlies, I did weeklies at that time because the IV was very high. Suddenly it was high for some reason, I don't remember. So you could do that, right? And if you are wrong, you're wrong, no problems. You can book loss of 10 points, 15 points in if I could do the calculations also. Delta will tell you approximate how much of per move in the underlying options will move. Okay, so I could look at it. If it moves by even 50 points or 100 points above, my options might only lose 10 points, right? Because delta is less than 20. So you need to look at all these things. But yes, I mean, I'm not, this time is not sufficient for me to answer all the questions and give you the structured thing. But you can, and I really suggest you very high, learn a technical analysis, learn it whichever way you want. And if you do fair bit in technical analysis, you will be able to catch these 4 points. And There's only because it's one-sided. You can also have the same Elliott waves on the reverse side. So you can catch 1, 2, 3, 4, and 5 and 6 at least 6 times. Okay, with about 80% accuracy, you can catch these times when markets are thinking that they have to go up and they would actually reverse and go down. And you could be accurate by 10 points, 20 points, maybe even if you are accurate by 50 points, how does it matter? And if you are doing that, at that point, markets are, the buyers are willing to give you whatever you ask for. And then if you are selling against those, you are very well positioned. Okay. So there are times when markets have surprised me. There are times when I thought something is going to happen and the markets have opened 100 points, 200 points against me. For example, Wipro was such trade. Infosys was such trade. So the first thing that I try to do is to improve my trade. For example, in Wipro, I talked about Infosys. How did I improve the trade? You can always improve your trade. You need to have an options trading software where you can add new trades and then look at how the next payoff graph is going to be. Without looking at payoff graphs, I don't take any trade. So after look at the payoff graphs, you make the improvements, and you can always do that. Or second option, simply take a sell, stop loss. You don't need to worry about anything. Okay, it's okay. I mean, it's not end of the story, right? Because if I'm making 5% a month every month, 1 month if I make 1% loss or 0.5% loss, it really doesn't matter, and that could be one of many trades that I'm doing, right? I never ever fight with the markets. Markets are king. All that I do is try to dance on the tunes of the markets. I don't try to time the markets. I don't try to fight the markets. So to sum it up, these are the things which are working towards my odds. Okay. The first one is how the investors get benefited. In very, very long terms, market always tend to go up. Your governments want markets to go up. People who have given you stock, the company owners, they want their stocks to go up. You, the investors, want markets to go up. There is nobody who wants markets to go down. Just that because of the emotions, sometimes markets go a little ahead of its time and it corrects. But if you really look at it, especially in the stock market phenomenon, unless you are talking about an enemy country, Pakistan may expect Indian markets to go down. I don't know. But everyone else, everyone who is there in the market, they always want markets to go up. So if you are selling put options, you are probably fair play. But I mean, that is that is the that is the reason why you would see investors making money in very long term, because the markets tend to go up. Second, the second anomaly or the odd that is on my side is options lose value in more than 70% cases, at times 90% cases, but no less than 70% cases. So if I am selling options, that itself gives me 70% risk reward or odds of winning. The next one, high IV, directly is linked to high probability and high profitability. So I am always on the lookout of the high IV and little bit of experience of technical analysis. So these are the 4 things I use in my favor to be able to make a lot of money in markets. And I'm very happy, very down to earth. 80-90% of the thing goes to the, I'm sorry for lights, 80-90% of the reason is markets. Markets have taught me a lot. All my teachers who have taught me so many things. But I mean, these are my soldiers who are there in the market, who are continuously helping me make money. Some rules that I recommend. These are actually the rules that I follow. There are more than these. These are the important ones which I could talk in this session. The first one is plan the trade and trade the plan. Emotions come when you are in the instance. When you are in the planning phase, when you are doing proper planning, your emotions are low. So when you plan the trade, you are not affected by emotions. Emotional traders lose the money. So if you plan the trade and trade the plan, you are able to get away with your emotions. Systems win. Okay. The second one, uh, always keep the worst case scenario in mind. There are times when you have had black swan. I know an option seller who made money in the market for almost 10 years, and he never used to look at technical analysis. He can't understand charts. He could just look at the amount of premium, just like Gujju Bhai, amount of premium, and he would sell both sells, calls and puts, and uh, large stocks. Okay. At least 13, 14 stocks he would have position at one point in time. Very good memory. He could match everything. But on COVID fall, suddenly he had a lost month. Black swan. Simple. He recovered that over next 2-3 months. Good for him. But you don't want to be out of the market. You don't want to be the one who would have to pay the electricity bills from borrowed money from wife or someone else, right? So please make sure that you watch out for the black swan. Include it in the plan. Documentation, extremely important, and I can show you some of the documentation. If my last trade is not documented, I don't go with the next trade. So I do a lot of documentation. I can just quickly show you some sample. This is what we did it as part of the. I don't do it for every trade, but this is what I did it for this monthly trade that I talked about. So every day what is the expectation from the market, every day what is the PCR for September, what is the PCR for October. Oops, sorry, did I do something? No, I just moved this guy. So every day the PCR for September, PCR for October, every day the option pain, where exactly is the option pain, what is the maximum profit that I could have, what is the maximum profit on the margin that I have, and this is book profit. And there is, I mean, in this particular trade, we do a lot of corrections, lot of additions, subtractions based on the market conditions. This was the maximum loss that our strategy had, 61,000 rupees. Okay. And eventually we are right now at 200,000. Correct, 2 lakhs. So if you are able to track this, now you can refer to it and say, boss, these are the mistakes that I did. Every trade of mine always has an options oracle file. Okay. So these are the strategy that I talked about, 2 lakh. This is exactly. Every trade is documented here. Every trade, every single trade. Now I talked about the TCS trade. This is TCS trade. I talked about Wipro trade, and I'm not talking about the numbers. I'm talking about the fact that I do documentation. It takes substantial energy. Okay, doesn't take a lot of time. But I did so many corrections. Wipro actually went against me. I had to make so many corrections. But eventually, I am now boiled down to just simple long call and short call. 400 call short. That's it. And now I know Wipro is at 377. I know it gives me very good control over what I am doing, right? And it allows me to multiply also. I can always go in and I can do more trades. The next one, never ever fight with the markets. Markets are always right and they will be right. Taking stop loss can be part of the plan. I usually don't take stop loss so often. In month of April or May, I had taken the stop loss. What happened was I usually start my month about say 6 to 7 weeks ahead, and I started the month, and the first trade went wrong, second trade went wrong, and I was suddenly with loss of about 25-30,000, and I could have improved that and I could have converted that into positive, but emotionally I was strained. So what I did was I just took stop loss. I closed all my positions. Next day, I did not trade anything. I did not look at the market. And day after, I entered into the market and then I moved. And after that, that month I made almost, I don't remember. I made good profits, recovered that loss, and I ended up the month with positive. But it's okay. That particular trade may go wrong. I mean, you are here to do business. You are here to be a dealer. You are not here to be the soldier who has to win over 20, 30, 50 soldiers, right? It's okay. Accept the loss. Move. There is always the next opportunity. Okay. I think this is where I close it. There is one question that I said that I will answer a little later. And actually, I forgot the question. So I promised someone, I think it was Vijay, right? Can you either type in the question or raise your hand again so that I get to understand your question? Yeah, that was Kumar Vijay. Vijay, can you please?
Yeah. Sir, so I mean to say there is a one time decay funda in the option market. So considering that, because there are many laymen, they may not be understanding this, and sometimes it's a very frustrating also to see chart, and people don't feel easy going with this actually.
Yeah.
So I mean to say, is there any definitely this?
Simple. I will give you very simple rules, okay? And I will not go to the charts. These may not give you all the high returns, but these will give you decent. See, when you're trading, if your goal is to make 1.5 to 2%, maybe up to 3% a month, it's extremely easy. You can blindly enter into the market and follow these basic rules, and you will be able to make 2 to 3% every month. If you want to earn 4%, 5%, it is little more difficult. If you want to aim for 8%, 10%, it gets even more difficult. And once you start moving up the ladder, no, it is possible to make 25% also. I mean, when I showed you the graphs, I talked about 400, 500 points. But when I did the calculation, I only did it for 5%. And I only talked about 90 points, right? Why? Because it is easy to get that 90 points. If I try to get those 400 points, and if I show my grid, there is high probability that I may lose 400 points. So rather than winning 20%, I might actually lose 20% also. So I'm not increasing that. So to cut the long story short, I'll give you a very simple example. Okay. So let's say Bank Nifty. We did not talk about Bank Nifty. So now I'm showing you Bank Nifty. And let's say you are on a weekly. So what you do is you first start with a straddle. Sorry.
My question is that say first November the month is starting, and maybe 23rd.
So you could do the same thing on 1st of November. I will come to that timing also. So let's say you are on the 1st of the week. So this is 27th of October expiry, and you were, let's say, last Thursday or Friday. And you look at straddle. Right now, Bank Nifty is 39,300. So 39,300 short put and 39,300 short call. Okay. And let's assume that it is also high IV market. Okay. The IV is low, but let's assume that the IV is high. So lots of emotions are there. There are lots of buyers who are buying it, and then there are intelligent sellers who are selling at these particular prices. So 517 and 70 and 760. So if I look at this, if I add both of these together, then it comes to around 1,300 points to be precise, right? And that 1,300 point is here. I hope you are able to see my cursor. Upper.
Yes.
Here, okay. upper protection and the lower protection. Okay. So now what you would see is that if there was somebody who was selling the straddle, that person is going to start making loss if markets go above 40,500 and if it goes below 38,000. Okay. Fair? So this is exactly how your graph will look like. 38,000 on the lower side and 40,500 on the upside. Simply change this, put to 38,000 and call to 40,500. What you are doing is you are changing the graph to be just little better than the most intelligent trader. Let's say you assume that the option sellers are most intelligent sellers and they never want to be at loss and they usually don't be at loss. Okay. And we looked at so many straddles we looked at, right, in Nifty, right from 16,800 to 18,000 we looked at, and most of the straddles were making money. So let's assume that this guy who is selling the straddle today is also going to make money. And so we expect markets to not go below 18,000 and not go beyond 40,500. And we are selling that. Okay. So we are trying to be even safe than that. Okay. So now what this is going to give you is around 2% in 1 week. Now it's actually much more than that because this software was made for US. So I'll just show you how much it would be. Here, let's say I'm selling Bank Nifty. And I don't get weekly, so I'm calculating on monthlies. This is actually 38,000 put, sell, and 40,500 call, sell. And I just remove the Nifty. It takes me about 1,40,000 of margin. Okay. And if I convert that into rupees, so 25 lots, I'm going to be making 9,900 rupees. Okay. If I do my math, 9,900 divide by 1,000, 40,000, right? That is actually 7%. Now this software calculated 2%. Now it depends on your risks. Now you don't want even this much of risk. You go even further down. Another thing you could do is you add maximum loss risk to it. Okay. So let's say you are going to buy put and you are going to buy call just to reduce risks even further. And let's say 37,500 put you buy and 41,000 call you buy. Okay. This has to be 25. Okay. So now what you're doing is out of whatever money, if I take it out, you were making around 9,900 rupees. So instead of making 9,900 rupees, now you are willing to make only 3,900 rupees. Correct? Oops, what did I do? I'm so sorry. Okay. So now you are only going to be taking 4,000 rupees, right? Instead of 9,900. But there is a big but. Let's add that here. So call 41,000 buy and put of 37,500. Oops, buy and 41,000 call buy. Now my margin is no more 1,40,000. My margin is only 53,000. So now if I do the calculation, 4,000 divided by 53,000, 53, right? Yeah, 53,000. Now this I will make even more, 7.5%. Now I can double the contracts, right? Second thing is what I have been able to do is to limit my risks. Still, I am covered up till 38,000 and till 40,500, little above than that. But now my maximum loss, I can go home and sleep saying that 4,000 I will make profit. Maximum I will lose is about 8,000 rupees. Right? What are the odds? Now, what are the odds that Bank Nifty in 1 week will go above? I mean, just a second. I have to delete these things. What are the odds that it will go above 3.5% and it will go below 3.7%? The probability of the profit is 60%. The odd is about 40%. Now, even if you make 60% of the times 4,000 rupees and you lose 40% of the times 8,000 rupees. Okay. I'm just doing that calculation also. So let's say 40% of the times you are going to be losing 8,000. The worst case scenario, sorry, 40 is 0.4 multiply by 8. You might lose 3.2 and 60% of the times you are going to be making 4. Sorry, I'm doing something wrong here. Odd of winning is 61%, but the loss is never going to be 8,000. The loss is going to be much lesser than 8,000. If you are going to be losing the money today, the market goes up, your stop loss will get hit and you are going to, this dotted line is today's loss, right? So if the markets immediately go below 838, you're only going to be losing 2,000. Okay. You're not going to be losing all that. And if the IV is higher, you are even going to earn a lot more. Okay. This is not looking extremely good because last Friday we had the IV drop 10%. So this, if you look at today's chart, that is what you should look at the maximum loss. As it goes to the next days, this is 15th of October, which was yesterday, Monday when it opens, it is going to be looking something like this. You are already going to be in profit just by the time value. You are saying that with time, the options lose the value, right? This is what is going to be seen. And that is exactly what I showed on the charts also. Now you will be in profit as long as Nifty doesn't go below 18,500 and doesn't go above, Bank Nifty doesn't go above 39,700. Now you can keep on managing it, right? There are different ways to manage the risks. I will not be able to cover it right away. If it starts going in one direction, what you do, and if it starts going up and down, what you need to do. I have my own specific rules. But if you want to trade very, very low risks, I mean, even if you want to reduce your risk, this is giving you 7% in a week. Don't go for 7%, go for 2%. Don't go for 38,000, go for 37,000. Go for 37,000 and 36,500. If 40,000, go 41,000. And make, sorry, this was 40,500. So 41,500. And go to 42,000. Now, this guy says only 1,300, but that 1,300, actually 1,400, really doesn't matter. 1,400 divided by 53,000. What did I do wrong? Let me do it again. 1,400 divided by 53,000. That is 2.6% in just 1 week. What do you need more? And now here, the probability of win is 84%. Because IV is low, you are getting less returns. Okay. If IV was higher, you would have gotten even better returns than this. If you're getting this 2% with 84% probability of win, what more you need? And you don't take full loss. You only wait for the loss of 1,500, 1,600. Whenever the strategy is that loss, take stop loss, move next week. 85% of the times, if you make win, that is all that you need, right? Maybe not 85%, even if you are 70% right. We have seen the charts, right? Option charts. There is one more question. Instead of doing 27th October, can we do weekly expiry? Actually, yes, I tried for weekly only, but this week expiry is the monthly expiry. So, Srinath, oh, sorry, I could do 20th. Sorry, I missed it out. I was under the impression that we are already in Diwali time. Sorry. So this is the weekly expiry. Weekly expiry, even with this 6% up and down, you are going to be making 240 rupees. And you can make this 240 and then next month, next week again 240. We are already on Monday. So you would get little more than that. You would get around 500 bucks. And you could now go down. This is giving 6% of Bank Nifty. Huh? If I show you the Bank Nifty charts, Bank Nifty, and if I do the weekly, and let's say if I plot ATR, 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 okay. So weekly ATR is around 1500 in Bank Nifty. 1900 was high for the last 2-3 weeks back, okay, and it has been almost 2200 in April when we had the major fall. And here, if you look at it for 1 week, what is that you are getting? What is that you are getting? You are getting 10%. 10% of 40,000 is 4,000. We are going with 4,000, twice of average move. ATR is average true range, right? Average move over a week. So we are getting twice of the average move over the week, even after that major crack, major fall. If you want 1600, 1700, you could be even closer. So you only need 3%. 3% was what we had, 38,000. Let's do weekly 38,000 and see how much it gives you. 38,000 and 40,500. Yep. So it would give you about 2,800 bucks. Your weekly expiry, so margin will not be 53,000. It will be even lower than that. But even after that, you get 2,875 divided by 53,000. 5%. Not bad, right? For a 6% move, both sides. And 6% move on both sides is 0.06 multiplied by 40,000, which is about 2,400 points in Bank Nifty. While your ATR, Bank Nifty ATR is around 1,500. And it was 2,200 when the major fall happened. So average, that's average. So you are still pretty good, right? I think there was 1 week here when it had more than that. There were few weeks here when it was more than that, but it is less than 20% of the times, right? So 80% probability that you are going to take home 5% in Bank Nifty in a week. Yeah, I mean, even if it is 90 to 10%, doesn't matter, right? If you, and we are not using any technical analysis. We are not trying to be perfect in the timing. We are not trying to do anything extraordinary. All that we are using is the people's emotions, because of which they are going to be paying us all that premium. I mean, this is what insurance companies do, right? When you go out and try to insurance your old parents, 80%, 80 years above, insurance company says, no, we don't, because there is more risk. But you are a healthy guy. If you want to get insurance, give me your money. That is what we are doing. We are selling the insurance, selling and taking the premium. Absolutely, it is like insurance premium. And that is why you need to be careful about black swan. Okay. So there's one quick thing that I would just quickly do. Last Friday, on my Friday session, I said that I am not able to analyze the current markets, and now it looks pretty much evident. This I was not able to put it in Elliott waves because it was the correction indeed, and it looks like this is A, this is B, and now this is C. So now right now we are on the 3 of C, so expect one more up move probably. If you give me a time, see, this is a 1, this is a 1, this is a 2, the 3 is exact 200 times of 1. Now we might have a 4, this might have been over, I don't know. And then after that there could be one more up move, and then we will start going down. Okay, so that is what I expect. So I continue to hold the 17,500 call shots. I'm happy with that. That's for the weekly shots, the weekly trade that I talked on the YouTube. That's here. The weekly YouTube trade, YT stands for YouTube. And if you would have taken that trade, you would have made, as of now, about 1,400 bucks. Again, this is covered, I mean, not covered, why I'm calling. There is a bear call spread, which takes, I have to go to Nifty. 17,500 and 18,000. 17,500 sell, and against it buy 18,000. So margin is around 42,000, and I'm already in profit of 1,500 in just one day. 1,400 divided by 43,000. 3%. One day. That's it. So you can earn. I mean, I'm not trying to show off. The idea here is to help everyone. I mean, I am carrying my bucket every day to the sea called markets, and it is filling the bucket completely. Whatever I need with the risks that I can afford, I am doing pretty good. I am just trying to impress upon you as to there is a possibility that you guys can also do the same. I'm just going to allow everyone to unmute if there is any more question. Any question, any comments, anything people want to talk about? It's an open forum now.
Hey, this is Srinath. Yeah, I think unfortunately I couldn't join the beginning part, but the last 20 minutes was very insightful. So maybe I'll look at the recording. But overall, thanks a lot for having the session. It was quite insightful. So look forward to more such sessions in the future.
Yeah, sure. Thank you. Thank you, Srinath. Please do watch the recording. Anyone else? Okay. So if there are no more questions, thanks a lot, everyone. It really, I enjoy doing this. I really enjoy doing this, and that's why I'm doing it. Thanks a lot for your patience, and I'm sure I will be able to hear a lot more stories, success stories from you all. That would be really happy to see. Thank you. I'm going to stop my sharing and going to stop the end the session. Cheers. Bye.